crypto markets drift back to the low end of the range after little to no rally as the credit crisis sours sentiment. Vols come under pressure from gamma sellers, but puts remain bid, especially in ETH. All this and more in this week's Crypto Insight. Crypto this week, Bitcoin's still very, very heavy, right? It really can't catch any kind of bid. We've been bearish for a long time. We were hoping for some sort of bounce to maybe the mid 20s. It just can't do it, right? I mean, it struggles to get above 22. So kind of retested last week, kind of heading back towards the lower end of the range. Not quite breaking 18K, but getting close. But this is not a bullish chart by any means. Now, some of the technicians out there might be encouraged by the idea that you're getting a potential bullish divergence. So if you look at the momentum indicator, you've got a higher low in this momentum indicator, whilst you're pretty close to the lows in price. So that might mean that we finally do get our bounce that we're looking for. But I wouldn't get too excited. It needs to really do some damage above 25K to think that a bottom's in, basically, right? So for me, from a technical perspective, we're miles away from the bottom right now, right? When I say miles away, maybe not in price, but we've got a good month or two, I would have thought, before we were really bottoming out. That's my suspicion. Yeah, it was the worst. It was the second worst quarterly performance for Bitcoin, down 58.6% last quarter. Okay, and the price, it shows no signs of bouncing yet. The fallout from Three Arrows Capital, Celsius, continues to linger, and there's still doubts around the safety of the lenders, of the remaining lenders who are still alive, and that if they've got any kind of skeletons in their closets. The sheer scale of the wealth destruction will put a negative spotlight on the industry, and this is likely to attract more stringent regulatory requirements, which may also kind of weigh on the space. Okay, and we've already seen in that respect last week, the European Parliament agreed on the terms of their MiCA bill, right? Markets in crypto assets, I believe, is that what it stands for? Proposed by the European Commission. It seems like it wasn't the rules that they had set out weren't quite as oppressive as was initially feared, which is good. Okay, but it was a comprehensive set of rules. And that probably means that's going to slow down the pace of innovation, okay, in the short term. But hopefully, the idea is it can attract institutional investment, more service providers in the space, more clarity around a framework for how it's regulated, and that should ultimately lead to increased adoption longer term. So it's probably a long-term positive, but maybe a short-term headwind, right, for that type of stuff, right? And you're also seeing various regulations being thrown around the miners in the US, right? And some requirements around those, right? So, it is always going to be something that attracts headlines and attention from politicians when it's moving so much and creating so much noise, basically, which is what it is. Yeah. Anyway, so that's kind of my thoughts on Bitcoin. In terms of the alts, you could look at the relative chart on the alts. If we kind of look at this, alts are kind of giving up a bit of ground. They've been outperforming recently, as we flagged, especially Solana did pretty well. But, that's giving up a bit. Bitcoin's down 9% on a week, ETH's down 10, and then the alts are kind of down anywhere between, 15 and 20, with Solana down 18. ETH's only marginally worse than Bitcoin. And if we look at the spread, the staked ETH versus regular ETH, that's kind of down to that's back up to kind of 97%. So again, showing signs of healing, let's say, rather than more of a shit show. And then, the closer we get to the merge, that thing should really trade back up to parity, basically, right? Because then there should be no difference between them. Yeah. But at the moment it's holding a liquidity premium for the ETH, right? Which is why it's trading sub parity. Yeah. And then with stocks, like I said already, with stocks looking shaky ahead of earnings and stuff, I would personally expect some more weakness in alts because they're just higher beta to the crypto space. And so I'm, whilst I have been selling puts on Solana and then buying them back or letting them expire, I've kind of closed out a lot of my Solana options. Well, pretty much everything, because I think I'll be able to get my hands on some Solana sub 20. So I'm kind of being patient to see what I can get there, basically, see if I can find any trades and opportunities to sell puts again if we do get another downdraft, which wouldn't surprise me. Yeah, so that's kind of how it's looking there. All right, so that's kind of my thoughts, quick thoughts on crypto overview. I'll hand over to Aaron with his bit. Yeah,
basically kind of just looking at some things that we're still looking to figure out. Have we capitulated? Have we reached the bottom? And that's kind of the theme for Will's notes this week. Starting in the top left, looking at the exchanges, we're looking at the total net position of Bitcoin on exchanges. And basically what you're seeing here between the red and the green, the red kind of lines down are showing that we've had the largest outflow of coins off of exchanges in Bitcoin's history. Will's thoughts are basically that it seems that this contagion, 3AC, Voyager, all these things blowing up seems to have hit the market with a lot of worry and concern with centralized entities, platforms, exchanges, things like that, places where you park your coins, they hold them for you, you earn some yield, or just places that are your custodian. It seems that there's a little bit of worry with these things. And so that's kind of been the lead to this largest outflow of coins that we've ever seen off of exchanges. From there, going to the top right, we're looking at the entity adjusted net unrealized profit and loss. That's basically just taking the market cap from the realized cap and dividing by the market cap. And basically when they go ahead and then overlay this with some sentiment bands, and basically what you can see here is this recent action has taken us into what they're signifying as capitulation zones and areas that we haven't seen other than in other serious kind of bear downtrends. You have COVID right here. You have the 2019 down, and then the 2015, 2016 bear market, you saw a lot of time in capitulation. So you don't necessarily go down and hit that red and come back out, but going into that red capitulation zone does seem to mark sort of you start to accumulate, hit a floor, and work your way back up. In that same sort of world, we have this bottom left chart here, which I found very interesting. Basically, on the bottom half of the chart, you're looking at the stablecoin, the two biggest stablecoins, USDT and USDC, their market cap divided by the total market cap for crypto. And you can see there's a pretty distinct range that comes out. People load up on USDT and USDC, they get dry powder in their stables. And then as that works its way down, Bitcoin seems to correlate with its way up. So you have this up, down, and people moving in and out of the coins and into dry powder. And so it would seem right now we are at the top of one of those ranges, which historically has led to then it's working its way back down as people move into coins. And so these red and green, you can see, we have a bottom in the coin, the stables, which moves with tops in Bitcoin and then vice versa. So right now you can see here, they're marking we're at the top of a range for accumulating stable coins, and this will remain to be seen if that's a bottom in Bitcoin's price. And then lastly, in the bottom right, kind of building on that bear macro model floor that we looked at last week, that overlaid the different indicators looking for macro levels that indicate a bottom or accumulation. This Bitcoin 4-year trend kind of falls right in that line where it's price action, where it's rarely seen crossing. Only 4 times in Bitcoin's history has it crossed through this 4-year trend. Right now is obviously one of those times. The other 3 times was COVID crash, and then twice in the 2015, 2016 bear market. So again, are we seeing signs that the move down is over? Not really, but does it look like we're moving in the right direction? It does seem that way. People are moving into safety. We're getting into these really high capitulation zones that are only seen in bear markets, kind of like last week. And it would seem that there's a lot of dry powder on the sidelines waiting to be activated. So, like kind of Imran was alluding to, it's the technical side of it is starting to feel like we're finding a bottom, but whether that is actually true, we'll just have to wait and see. And that is on chain for this week.
Let's look at the vol now. So first we'll start with realized vol as always. A little pop in implieds into month-end weakness, obviously, as we kind of tested that 18K area again. But you can see, you know, these little pops in the pink lines into the 30th of June and 1st of July, they got taken back down pretty quickly. So as they collapsed into the long weekend, right? As usual, the ETH vol overshot. So you've got the pink below the blue. So you've got those implied vols overshooting the realized, showing that ETH is typically a better value gamma. When those implieds get below realized, that happens quite a lot, potentially offering you some opportunity there if you want to own some gamma. BTC gamma looks relatively well priced, with realized back to kind of more median levels at around 70. No clear trade there for me. Implied realized gaps kind of nothing, so nothing to do. Given the macro backdrop and expectations that the sell-off isn't done yet, I'd probably be a better buyer of gamma if I had to do anything. But I'd probably, this week, I'm probably going to wait, see if I can get ETH on a sub 80 level and maybe pick up some ETH gamma again, right? That would kind of be my game plan, but not really in a rush. You know, these vols are tough. I mean, they're not impossible to carry in the 80s, but it's not a no-brainer, right? And you may have a week where it realizes 60 and you just can't make anything out of it, right? So I prefer to buy these when I've got a stronger conviction on the spot actually moving in a certain direction. And then I'll buy a bit of gamma maybe to like then have that against my delta and kind of lean into that delta that way, basically, right? So that's kind of one of the ways I look at it. If we then look at the kind of term structures and implieds, what they've been up to. We had a bit of a kink, as I flagged, I've circled here in the shadow term structure. So from a week ago, we had a bit of a kink, a bit of a in the sort of mid to late July period, where we have, you know, FOMC meeting and CPI numbers. And that seems to be what kind of triggers a bit of volatility in markets. So the market was a bit fearful of that. But with the relatively low realized, you know, and the gamma sellers have come in basically, right? And what have they sold? They've sold the most expensive part of the curve, right? So they've taken that kink out. So you're seeing ETH kind of collapsing back to a more normal contango shape, taking that hump out. And similar sort of story in Bitcoin, although still maintaining a tiny little bit of hump there, but kind of heading in the same sort of direction. But absolute levels, obviously, of Bitcoin are lower than absolute levels of ETH. So that's kind of, that front end gamma is kind of holding a bit better because of its absolute level. Yeah. If you look at the kind of time series of the actual rolling at the money vols, you see, you know, on that pop that we got in vol midweek, on the spot weakness, you know, it was kind of led by that weekly, by the front end again. So you did get an inversion, gave it back very, very quickly, right? So you see that mean reversion happens extremely fast in crypto markets because you have that relentless weekly selling coming to the table with the DOVs every time. Yeah. If we then look at skew, that been doing extremely volatile. I would say skew's just damn erratic right now. Yeah, short dated skew got as far as -25 again as the market was selling off to the lows, and then all of a sudden nothing happens for a few days and it's back to like -7, right? Extremely skittish and volatile skew, right, in the 1 week maturity. Now the 1 month to 3 month is a bit more stable. For BTC, it's around 12 vols for puts. If you then look over at Ethereum, bit more stable as well, but you know, holding at about 15 to 18 vols for short dated skew, again for puts. And then I would just generally expect put skew to remain quite bid for the foreseeable future, as the call sellers seem to be being quite rewarded for like systematically selling calls, especially in any bounce, because the bounce fades pretty fast and doesn't really get any legs. And then the puts kind of give you that need for that macro protection that you need, right? And you're getting that basically. So I don't see the skew kind of normalizing towards flat anytime soon. Yeah, no reason for it to. If we then look at the flows, starting with BTC and ETH flows, we're seeing put demand in the short dated expiries. So, you know, in BTC between the sort of 8th and 29th of July expiries, I've circled there. You've got anywhere between say 13K and 15K strikes, the most active. People are still putting on those hedges, those crash hedges. Obviously now, you know, miners are in a less comfortable position. Just all crypto market participants have got more of a need to kind of hedge that crash, right? Because for whatever credit risk they might think they have on their books and things like that, right? They need more. they're more fearful, and therefore they're more likely to want to own that protection, basically. Yeah. Now, on the other side of that, we've got sellers of calls and call spreads, anywhere from July at the monies to slightly upsides. So lots of call selling across the curve as people are happy to offload a bit of vol. QCP kind of saying that, you know, they thought that they had been leaning short vol as well, but they started to cover actually. But in general, you know, the longer term part of the curve is probably not going to pop that dramatically. So people are still quite comfortable kind of launching some of that longer dated vol like out to December and doing it via call spreads. We did see a small clip of 40K calls being bought in December in like 500 lots on a block trade, but that was like the one buyer out of mainly sellers, it looks like. Yeah. In Ethereum, we're generally seeing at the money vol sellers. So you're seeing put sellers across sort of July expiries, even sort of August in the at the money area near 1,000 strike. We did see some low premium call buying going on in end of July in that 14 to 1600 area. Very low premium calls there to play a potential bounce. And then usual long-term flows, people are expressing a bullish view through call flies. So that's the 3,000, 4,000, 5,000 call fly in March 23. Wouldn't cost a lot of premium, gives you potential for 1,000 points of upside. It's quite a low premium, low Greek exposure right now, right? Personally, I think it's a bit pointless because it's too far out in terms of time. So even if market rallies a lot, you've got very little Greeks on that. So it's not going to change in value that much, basically, right? So personally, I think it's a bit misguided, that trade, even though it looks attractive from a low premium standpoint. Something I used to see a lot in the banks, like clients would love longer dated call flies that cost next to nothing because the leverage looked amazing. But what they failed to realize is for the next 3 months, whatever spot does, the price of that thing's hardly going to change, right? So it's just seems a bit pointless. Yeah. Anyway, that's me just cussing whoever did that. Sorry if you're watching or listening. Anyway, that's kind of it for ETH and Bitcoin flows. And then the last thing I would talk about is Solana, because we've got a bit more data on Solana now. So there's more stuff to say because it's trading a bit more actively. So obviously we mentioned last week there was that massive clip of 50 strike calls that went up in July as a bullish play. So what are we seeing in Solana? So you've got the term structure collapsing, similar sort of story where that July stuff getting hammered. But that's because you've got a massive implied realized vol spread in Solana, right? So you've got realized at about 105, implies we're at like 130, right? So that needed to come in, right? There was too much vol arb there to capture for the market makers that they had to sell that basically, right? And you also had the DOV selling that stuff as well. So that kind of helps give it a bit of a kick, right? So the front end came in due to that big implied realized gap. We've got a bit of a funny looking curve, but it's kind of normal contango sort of shape now. If you look at the flows, we did see some reasonable clips go up in the 8th of July, 35 calls and 29 puts, which is just it's like a strangle, which looks perfectly like what you would expect the DOVs to sell. So I think that's very likely DOV hedging, and it wasn't a block trade. It was done on the screens. So I think that's just market makers offloading gamma that they're getting from the DOVs, right? In terms of block trades, the main block trade was this one that I'm highlighting here, which is the 15th of July 40 calls, which went up in about 10,000 lots. And that was here on this side as well. It's like the main block trade that went up this week in blue. Again, someone trying to play a bit of a short-term rally in Solana, but I don't like the expression myself. I mean, I'm sure the option isn't very expensive in terms of premium. So it's a bit of a lottery ticket, but it's very binary, right? I mean, I just think if you're going to play Solana upside right now, you probably want to buy yourself a bit more time. So I'd be more inclined to be looking at August and September expiries to express bullish views on Solana so that I don't have to be right immediately, right? And my bias in the short term is bearish anyway, right? So obviously I think it's way too short dated. I mean, they might get lucky on some sort of, on the CPI number next week. It's probably to play that and then maybe a bullish reaction to that number. And then you might be able to bang those out for some profit. But like I said, I don't like those sort of binary trades, especially when they're on a 100+ vol, which this one obviously is. Right. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A, and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.